So let's go straight to our deliberations and the areas in the budget that we would want to cover. Our first table shows what we are going to cover: the economic overview, the budget highlights, investor consideration. In particular, Petrotrin. What's the story about NIF2 and the housing bonds? Our next graph speaks to some of the aspects of economic overview. And let's look first of all at real GDP. What is happening with real GDP and how solid are the estimates? First of all, if you look back to 2015 and 2016 on your screen, you would see that we've had negative real GDP in 2016, and the most revised figures show that it was negative to the extent of about 6.5%. Forward to 2017, and what has been happening again, the revised figures show that GDP further declined by 1.9%. Now, estimates for 2019, the year just gone by, in the you may recall that in the minister's last budget presentation, that estimate was 2.2%, and it has been revised by the Minister of Finance to 1.9%. However, the IMF, by comparison, has suggested that this figure will be in the order of 1% uh, for the year just gone by, 2018. And for 2019, while government projections are 2.2%, IMF is projecting 0.9%. So let's keep this in mind, because as you know, these figures are usually revised one or more times over the next year or two. So moving right along, let's look at what's happening, moving away from real GDP to nominal GDP. And you will recall that for the 2018 year, the Honorable Minister's estimate of, for the Ministry of Finance, I should say, estimate of nominal GDP was in the order of 168 billion. And in it, the outturn or the revised estimate is down to $158 billion. And the expected figures for nominal 2019, that is this budgeted year, is $162 billion. So what does that mean, and how does this play out in terms as we move from nominal GDP? Let's see what's happening otherwise. And the pickup in GDP growth is, of course, underpinned by the rebound in the energy sector, 2.2% growth in 2018, and growth in the manufacturing subsector, which includes petrochemicals, of 7.3% in 2018. We'll talk a little bit more about the impact of that reclassification, as it is in 2016, of the petrochemical sector as a subsector of manufacturing. However, let's move forward. Uh, the manufacturing GDP growth in 2017 um, is somewhat obfuscated from 2016 on the basis of that matter which I just mentioned, which is the inclusion of uh, uh, the petrochemical sector into manufacturing. As you would see, manufacturing forecasted to account for 20% of GDP in 2018, when it was 5.7% in 2016. And the major change really is the inclusion of the petrochemical and chemical products, which now account for 59% of the manufacturing sector, whereas previous to 2016, it was not included in there at all. Let's go forward now. So have a look at what the inclusion of the petrochemical sector means to manufacturing. As I just mentioned, It's 59% of manufacturing, of the overall 100% manufacturing. Next being food and beverages, 50%, textiles, a low 3%, and other manufactured products at 8%. So major shift and major change because of the reclassification, consistent of course with international norms and international classification, but yet still obfuscating what we have been talking about previously, which is to get manufacturing up as a percentage of overall GDP. In fact, it is akin to a resetting of the deck chairs on the Titanic because it really does not add much to the total figure, but just changes the classification. Let's move on to the next graph, which speaks now to the area of debt and public sector debt. Prior to the budget presentation, one of the concerns was how do you finance that 800-pound gorilla in the room, which is Petrotrin, and what is it going to mean for the uh, debt of Trinidad and Tobago, dependent on where that debt is placed. Most importantly, and of highest consideration, is the question of the 850 million US dollars that Petrotrin that comes due and is a debt of Petrotrin in August 2019, which is this budget year going forward. We'll talk a little bit more about that, but what I really wanted to point out here is that some of the factors that are important, debt in absolute terms, yes, that is growing, as you would see on your screen. So it moved in 2017 from 93 billion to 99.6. But of equal importance, as far as lenders are concerned, is this particular line. This line, which is showing debt to GDP. So you see that the debt to GDP ratio, which is debt to nominal GDP, fall from 62.1% to just under 61%. Why? Because the GDP, which is the denominator, is growing essentially at a faster clip than the rate of growth debt. Next graph. When we move to our next graph, what are some of the indicators I want to point out to you? One, reserves have fallen, foreign exchange reserves have fallen from 8.5 billion to 7.5 billion in from September 2017, September 2017 to September 2018, $1 billion decline. Import cover, which reflects a decline in import cover, that is the number of months cover that we have for import, from 9.8 months to 8.1 months. I've mentioned already public sector debt going up, but still in terms of the ratio within a very comfortable level that or limit or level of that 65%. Net public sector debt has adjusted, as we mentioned. Other factors, inflation, probably lowest that they have been in living memory, from 1.7% down to 1.1%. Unemployment or unemployment, 5.1%, just about, I believe the minister mentioned something in the order of 5%. All of these economic factors some suggest some level of comfort and operating within reasonable limits. Nothing stands out there as being of deep concern, except for the fact that the rate of reserves have been falling at a clip that we should be concerned about. As we move on, I want to get now into the budget highlights for 20 for the fiscal year 2018-2019, and to point out some areas that may require some higher level of clarification, either by the minister or coming in the debate, the parliamentary debate over the next week or two. First of all, as you look at revenues, you would see that the budgeted revenue as at the mid-year was in the order of $44.68 billion. This is in the minister's presentation at the moment. The actual outturn at the end of the year is $42.6 billion. This is coming from the estimates of revenue and from the budget and other budgetary documents. So that there has been a decline in collection of revenue, whether it be by means of taxation or otherwise, capital receipts and so on. And so that has fallen. And the projection for 2019 is to move up to $47.72 billion. Expenditures. When we look at the expenditure line, what are we seeing in the expenditure line? We are seeing that essentially what was budgeted as expenditure at the half year was 48.9 roughly billion dollars, and the actual outturn based on cash accounting, of course, was 48.9 billion dollars. For 2019, the expectation is that for 2019, the budgeted expenditure will be just about $51.8 billion. A change in expenditure, an increase in expenditure of $2.9 billion. So what does that mean for the fiscal gap going forward, and what was the actual fiscal gap for the fiscal year 2018? Firstly, the budgeted figure for the fiscal gap as of the mid-year half year was $4.2 billion. As it turned out, the fiscal gap was in the order of $6.25 billion. In 2019, going forward, the fiscal gap is estimated to be $4.05 billion, for a reduction in the gap of $2.1 billion. Now, these figures on paper do seem fairly comfortable in terms of the benchmark, the fiscal gap relative to GDP budgeted in 2019 being 2.5%, as it was budgeted for 2018. The actual outturn of 3.9 is a bit over the sort of regular expectation. And so let's see what's going to happen in some of the other areas. When we turn to revenue and expenditure, and we look back over the past 3 or 5 years, what has been happening? Well, first of all, what you see is, in fact, that revenues have been falling from 2015 from 57 billion, 2016 down to 45 billion, 2017 a very difficult year down to 36 billion, and in 2018 42.6 billion, and this is still below the projected revenue at the half year 2018. And the revenues expected to grow by some $5.1 billion in 2018 from that 42.6 billion to 47.7. What does it all translate into? When you look at some of our other figures, which is expenditure, we are seeing that expenditure has been contained off the tail since 2015 from $60 billion fallen to 52, and in this year, this past year, $48.9 billion, and expected to go up to, or projected to go up to $51.8 billion in this fiscal year ahead, 2019. Let's turn to the next graph to speak to what brings about these figures. First of all, the reprieve in oil prices. We have received a reprieve because of the fact that oil prices, which was budgeted at $52 in the last fiscal year, is now budgeted at $65. How realistic is this? Well, if you look at spot price today, the benchmark or which we use of WTI prices at spot today, at my last look, was just a bit over $75. So is $65 a reasonable figure? By most estimates, international estimates, 65 is a relatively conservative figure for oil price. And the average price in 2018, while it was budgeted at $52, the average price of oil was $63.86 for the entire fiscal year. Gas per MMBTU, that figure has not changed from $2.75 per MMBTU. So that we can expect in the year ahead that energy revenues would increase because of the likely higher oil prices. The big question is, what would uh, production be like? We have heard the discussion from the Honorable Minister. We have heard figures of 60,000 barrels of oil per day from the 40-odd thousand that we've had. We've heard other figures in terms of projections going forward. So a main factor in what will generate the energy oil revenue in particular is what will be production. Of course, taxes um, ought to be higher from this area because the supplemental petroleum tax kicks in at the $50 figure. And there is the expectation and the projection that oil prices will be at that $65 figure. Moving on, when we look at one of the questions that I've just articulated is what will be the level of oil production to create the value of crude oil produced. Of course, it is volume by price. We've talked about price and the question what would be the volume. Next to consider is the question of the breakdown of government revenues into energy and non-energy. So when you look at this particular table, what are you seeing? Well, we've seen this decline in terms of, which is the yellow bar, in terms of energy revenues, falling from 2015, 19.8 billion, and continuing to fall in to 8.3, and there's some uptick in 2017, and then moving from 9.1 in 2017 up to $12 billion in 2018. What will that breakout be? We will look to see what that breakout is as we go forward. So just to mention that one of the main factors that would have been pointed out would have been some of the fiscal incentives for exploration, and that is the 100% credit given for exploration costs, which would have meant essentially that it would have gone against, it would have been expensed fully in the year in which such exploration undertakings would have taken place. Now, that was an important factor in the fall in terms of the tax take from the various companies because they, for various reasons, they would have been allowed to expense exploration costs. Just to mention though that that particular incentive would now have expired or expired at the end of 2017. And this is an important contributor to the growth or the return to higher levels of energy revenues. The non-energy sector, again, when you look at what has been happening, it it has been growing from 2017 to 2018 as well. So our next graph. Let us look now at the question of government expenditure. Going back to 2015 onwards, to the projections for 2019. And what you would see is that from a high of $60 billion in central government expenditure, that would have fallen by something like 11 to $12 billion from 2017 going into 2018, and would clip up just from 48.9. So if the projections are realized, to $51.8 billion. What is the breakout of this expenditure? Important question. What is the breakout of this expenditure? And you would see again transfers and subsidies being a very significant part, over 50% and on average 56% of overall expenditure. And that is for in the social sector, significant in the area of the state enterprises and more particularly in the area of other state and public bodies as the main factors. You will see some stabilization in wages and salaries, which is about in the order of 9.9 down to $9.1 billion, and goods and services in the order of about 5.8 to $5.9 billion. Interest payments 4.5 to 4, down to $4.4 billion, which is about just under 10% of expenditure. We move on now to other areas. The main concern that which has been expressed about the budget was the question of the adjustment down of the fuel subsidy. So partial removal of the fuel subsidy, in particular super gasoline, that has where the previous price was $3.97 per liter, the revised price is now $4.97, so that there's a dollar increase in super gasoline. And the question is, how is that going to impact the the the, um, the economy in terms of transportation, in terms of its input and its feed into other areas? Diesel has remained the same. I think that it was a good move to hold the mass transportation, mass transit cost um, as it depends in terms of fuel, diesel fuel. And I think that was a good move. However, when you look forward, what is the component that is super gasoline in the overall mix of the fuel? Let's turn to our next table. And what you will see is that, of course, premium has remained the same at 575. We talked about super going up from 396 to 496, and diesel remaining the same. But let us look now at the components. When we look at the components, what we see is that approximately 60% of fuel consumption is in super gasoline. And I think 3 or 4% or maybe 5% in premium, 3% in premium, and the rest is in diesel. So some of the arguments that are being made about the impact of the increase of super gasoline are justifiable arguments. How it will impact food prices, it may impact some pick upwards in terms of headline inflation as it transcends across the economy. So we can expect some increase in headline inflation going forward as we speak to the macroeconomics. Our next, our next concern, or should I say, our next area, we've talked about the macroeconomics. We have talked about the whole of the budget and the composition of the budget, and we need to have a look now at what are the investor implications. So I will speak first to the matter of Petrotrin. I think, as I've said before, that this is the major consideration, how it's going to impact central government. By dint of one, 850 million US dollars, uh, a, a bond due to be paid by Petrotrin in August 2019. Two, the matter of the settlement of termination payments in the order of $2.6 billion. And it is not clear as yet where these factors are going to be taken up. There is, in recent media reports, the statement that the $2.6 billion in separation benefits will have to be borne by Petrotrin. The question remains, how is that going to be borne when Petrotrin has been a loss maker for the past several years and it is seeking coverage, as we have heard, for further guarantees for its working capital. So it's a major question. Who will carry this debt burden for Petrotrin? It does seem that the government will have to stand behind this in some form or the other. And it is a critical question that we will have to address as we go along in the year ahead. Uh, the, the capacity for government to cover the payment is uh, fairly solid. The capacity for Petrotrin to carry this is very questionable. So let's go on to our next slide, which speaks to gives a breakdown of Petrotrin termination package, and we can then move on. So as we move forward, let's bring up our next graph that is here. Let's see what we've been talking about. Petrotrin 2019, the 850 million US dollars. There is good coverage in terms of the capacity to repay US dollars, but that is not the idea. The idea is more refinancing. And refinancing means that somebody has to take up the debt on their book. And as we have said, we'll have a look now at what if that debt has to be carried by a central government, what it could mean. So we look going forward at 2019, government borrowings in the order of $4 billion TT, US borrowings in the order of 0.2226 million, 0.226 US. And so the question is, how will that additional net debt, if on top of that, or at the bottom, as we've shown here, is placed Petrotrin, how will that impact the matter of debt to GDP? And the blue line here shows you that taking all of these factors into consideration, what we will be seeing is that the debt to GDP, based on the estimate of nominal GDP growth, as well as the estimate of debt growth, and including Petrotrin for 2019, will put us above that original soft target of 65%. And hence we have seen that government has in fact extended, the Honorable Minister of Finance has lifted the limit to somewhere 70%, still within manageable proportion, but that is an aspect that we will have to look at as we go further. The next question was some mention of a National Investment Fund, NIF2. And the question of NIF2, as the Honorable Minister would have suggested, is to use something, a similar type of arrangement as occurred in NIF in order to raise finance. For what purpose has not been said, but we know that this is on the cards. So let's look at some of the numbers and some of the opportunities. If you are going to do asset-backed financing, where are the opportunities? I've picked up some selected areas. Well, in terms of shares, you have first, and the cumulative value at yesterday's price of first, which government own, which is 64%, is about $5.2 billion. Let's look at another area, NIL. NIL, when you look at NIL, government owns two corporations sold about 66% of NEL at a price of 8.95. That will be another $3 billion. So you have readily available on these just two selected areas about $8.8 billion. So the question is there room for a second NIF? The answer is yes. There is room for a second NIF. And as you go down that chart, you'll see there are other available assets which might be able to be brought on, and that is the TTNGL shares, NEL shares owned by the NGC, certain shares, about 4% shares of Angostura, which is still the subject of ownership because it is held in the CL group at the moment, and MHTL. So there is the opportunity for divestment or asset-backed financing from these areas. So there is capacity if you are asking as an investor that question of what is the capacity. And you can see it could be as high as $14.3 billion. Interesting concept which I want to raise here now is there room for an NIF in US dollars? So let's go to our next graph, go beyond this TT. And the answer is yes, there is room, because when you look at what's happened, there is about 3.6 billion US dollars in the banking system. So let's go back to that graph. Of that 3.6 billion dollars in the banking system, there are US dollar, there are assets that can generate US dollar earnings. And these include, when you look at it, these include TTNGL, its shareholding of Phoenix Gas, which is essentially generates US dollar revenue. Then there is within NEL, Tringen, Atlantic LNG shareholding, and of course PPG shareholding. And there is MHTL, Methanol Holdings International. All of these factors point to that there is room for a US dollar NIF, if you want to call it that. And we go to our next graph, and what you will see in that graph, oh, I don't have that graph anymore, but what it shows is the capacity to raise approximately 400 million US dollars using a similar NIF system. The third point that the minister made in terms of bond issues is about housing bonds. And there is much opacity in terms of what will be the sort of pricing and the mechanism for raising this bond and so on. Yes, it will aid 6,000 new housing units, but what does it mean for the investor? We'll await the greater details as the budget deliberations go on and the debate goes on in Parliament to find out more about these things. So some conclusions. One, higher energy prices likely to result in higher energy revenues, and that's a good story for the country. Expenditure has been contained, even though now in this 2019 year, it is expected that expenditure will move up from the $40.9 billion up to about $51 billion and slightly above. Continued deficit financing may present opportunities for investors, and if contained within the level that has been suggested, it is still manageable within the 65 to 70% debt to GDP. Big question of Petrotrin, where is that debt going to be placed? And I'm concerned about that particular area, which is the Petrotrin area. Higher gasoline prices, yes, that is like to have some fillip to inflation, but at the end of the day, it would have been, it is being used, the savings, shall we say, on that subsidy is being used to support the more vulnerable citizens in our community, which is a laudable impact. Those are my thoughts and our thoughts at Bourse on the budget, and we will open it up for questions for the next 15 to 20 minutes or so. First question, very high on the order. Can Petrotrin be kept open? Now, that's a complex question as to whether Petrotrin can be kept open or not. The real issue is what is the shareholder and the directors, what is their intent? They have made their intent clear. We just saw recently the challenge to that matter at the industrial court. Let's see how that goes. That it can be kept open or not, the facts that are before us suggest a gloomy picture. Next question, will oil prices continue to go up? International expert opinion suggests that oil prices can be kept in the order of $60 to $70 per barrel. And if that is the case at $60 to $70 per barrel, the Honorable Minister has picked a midpoint of 65, which is more, I would say, a reasonably conservative position. Next question, do you expect diesel prices to go up once Petrotrin closes? I have said before that the matter of the subsidy on diesel is really not dependent on Petrotrin. It is dependent on what market price for diesel would be. And the difference between market price and the price at which it is sold at the pump is really the subsidy. So it really is a moot question about whether Petrotrin closes or not. The more critical question is for how long can the subsidy be maintained? Right? So we will entertain just a couple more questions. I think most of the areas have been well covered over the past 3 days or so, and there may not be much more that you would want to raise. Or, however, feel free to text us, email us your questions, and we will respond to them in the course of the next week or so. Have yourself a wonderful day. This has been one of our webinar series addressing the budget.